Listen, if you are still losing money in trading, it's not because the market is rigged. It's because you are making these 5 deadly mistakes. And let me guess, you've probably already experienced this. You spot what you think is the perfect chart pattern, you enter the trade, and then boom, market slaps you in the face and goes in opposite direction. It's frustrating, it's exhausting, and if you don't fix this, it's going to keep happening. But don't worry, by the end of this video, you will know exactly what to avoid and how to turn this around. Plus, stay until the end, because I've got a bonus strategy that will literally change the way you trade. Let's get straight into it. Mistake number 1. Forcing patterns. Be honest, how many times have you stared at a chart, desperate to find the setup, and suddenly thought, oh, it looks like a head and shoulders. But here is the problem. If you have to convince yourself it's a pattern, it's not.
For example, look at this chart. Someone might say this is a double top. But is it really? Look at the peaks. They are uneven. The neckline is not clear and volume is not confirming it. So what happens? The market doesn't care about your theory and it goes straight up and you are left holding the bag. Only trade textbook perfect patterns. Use the 3-step validation: symmetry, breakout confirmation, and volume alignment.
Mistake number 2. Trading without context. Patterns are not magical. They only work if a market environment supports them.
Here is a great example. You see what looks like a big flag, so you go short. But look at the bigger picture. The market is in a strong uptrend with higher highs and higher lows. It's just a consolidation before the next breakout. You just got wrecked for ignoring context. Always zoom out and analyze the higher time frame. Use tools like moving averages or trend lines to confirm a market structure.
Now this one hurts. Mistake number 3. Jumping in without confirmation. You see a breakout starting, you FOMO into the trade, and then fake out. Your stop loss gets hit and the market reverses. Here is the truth. Real traders wait for confirmation.
Look at this pattern. It's a rising wedge. If you jumped in early, you'd have been wrecked. But if you waited for a clean breakout below support combined with volume confirmation, you'd have crushed it. Wait for the breakout to be validated by volume or candlestick patterns. Use alerts instead of staring at the chart all day.
Mistake number 4. Ignoring volume. Volume is one of the most powerful tools in trading, yet so many people completely overlook it.
For example, let's look at this triangle pattern. The breakout looks clean, right? But the volume is dropping. That's a major red flag. And guess what? The trade failed. Use volume to confirm breakouts or consolidations. Consider indicators like OPV for additional clarity.
And finally, mistake number 5. Thinking that patterns are guarantees. Here is the deal. Patterns are probabilities, not certainties. A perfect setup can still fail if the market conditions change.
Take this head and shoulders pattern. It broke down perfectly until major news dropped, price reversed, and traders who didn't use stop losses got destroyed. Always use risk management like stop losses. Never bet more than 1 or 2% of your account on a single trade.
Alright, here is the bonus strategy. Backtesting is your secret weapon. If you want to master chart patterns, you need to test them across multiple markets, time frames, and conditions. For example, I backtested over 100 trades using a standing triangle on Ethereum's 4-hour chart. The result? A 65% win rate when combined with proper risk management. Do this and you'll go from guessing to trading with confidence. If you avoid these mistakes, you will already be ahead of 90% of traders out there. And hey, if you found this helpful, hit that like button, subscribe, and grab the copy of my book in description. Let's level up your trading together. See you in the next video.